please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
You're with us here on a fresh new edition of Midcap Radar, and look at what the market is doing. What a sharp turnaround this is looking like. I mean, we are at the day's lowest point. 10,150 is where the Nifty is at, and the low is about 10,161. Rima, afternoon. I mean, the most amazing thing was that this news on China retaliating with tariffs has been actually around for the last 1.5 hours or so. Yeah. You know, when European markets opened, nothing moved. I mean, markets were sort of mildly lower, but there wasn't any sort of reaction like this. But, well, I think, is it the Chinese envoy speaking, the Chinese representative coming on air and announcing this officially? I don't know what has hit risk sentiment, but we have the Chinese now saying that they're going to impose retaliatory tariffs on $50 billion worth of U.S. goods. I mean, they include all kinds of things, aircrafts and automobiles and agricultural products, etc., etc. And the reaction is classic risk-off. You got the S&P 500 futures, which are down 1%. Safe havens like gold, etc., shooting up, and stocks, of course, have taken a hit. I was looking at the U.S. 10-year as well. That is also drifting a little lower. So it's a pretty straightforward, classic risk-off kind of move. How far this stretches, I think, is what we have to see. I think we've got a quick reaction coming in. Paul Kitney is Chief Equity Strategist with Daiwa Capital Markets. He's joining us on the phone line. Paul, thanks very much. What's your sense on the announcement from China? How serious is this? Was this expected? Or this comes as completely a surprise?
I think it's quite expected, and I don't think anyone really believed that China was just going to retaliate with $3 billion worth of tariffs after the 50 or 60 billion imposed on China by the United States. So I think the areas are also fairly predictable. So soybeans were always going to be on the agenda. Aircraft was always sort of a potential area as well. Same with autos. What I see so far is quite a measured response. One needs to sort of bear in mind that it's in China's best interest not to have an escalation, but to sort of meet these tariffs in a measured way, as the impact on its economy will be greater from a trade war than it will on the United States.
Hi, Paul. Afternoon. So you're saying the response from China so far has been measured, but what can explain this bout of weakness and nervousness which has crept into the equity markets? Dow futures is down 300 points. Hang Seng has slipped close to about 600 odd points. There's clearly a lot of nervousness in the equity markets as we speak.
Yes, I think there's been nervousness in the equity markets, and we've actually been in a period of elevated volatility since the beginning of February, which we haven't sort of pulled out of. So, the first phase of this was concerns over rising bond yields. It's been then overcome by, it was supplanted by these issues with regards to trade protectionism. But what we've seen in terms of the latter so far, and I don't think you can divorce these two particular events as being part of a general period of normalization in volatility after an extraordinary period of low volatility. It's been over 2 years since a 10% correction. So we're in this particular phase where we're in a higher volatility paradigm, and it's during this time that I think we were overdue for some risk off. So I would agree with that earlier characterization on your show. I think what we're seeing here again, it's pretty small stuff. I mean, the Sensex Nifty down about 50 basis points on the cash. Yes, I can see the futures are coming off a tad here. The bond market is also a little bit stronger in the U.S. But frankly speaking, I think this was largely to be expected.
Paul, will these retaliatory tariffs have the desired impact? Because if they don't, then I think that will raise more serious questions. What will it take for China to show the U.S. that it means business? I mean, will it guide the yuan lower? Will it change policy on forex reserves? I mean, those are questions which will now get asked.
Well, I think in a flat-out trade war, as I mentioned before, the orders of magnitude, and this is, as a result of simulations by academia and other people, show that in a trade war, the U.S. has less to lose than China. However, China does have the ability to pull back on its treasury purchases. This is something that they haven't done so far, but it's a policy tool that is up their sleeve, and that would certainly indicate their seriousness if that was to take place. Now, so far I haven't got to that stage. I think also so far when we look at the magnitude of these tariffs, we're looking at $50 or $60 billion versus, $14 billion economies. Is still pretty small. We obviously wouldn't want this to extend, into a wider set of and quantitatively larger group of sectors and industries. But that is a potential tool that China does have up their sleeve.
So just very quickly, would this be, would this news mean that you sell the equity markets? Is that the advice that you would give clients now, considering we've entered into a period of heightened volatility?
No, well, I think overall, I don't think that the real risk that people would be concerned about is that the trade cycle is negatively affected by this trade protectionism. So in Asia, and our focus here is on Asian markets, a lot of which are emerging markets. So emerging markets have got favorable tailwinds with respect to strong commodity prices, strong trade cycle, a valuation discount versus developed market, and a flat to slightly weakish US dollar. All is a constructive case for emerging markets. Now, one of those things would need to go wrong in order to sort of move away from that sort of more general constructive view. Now, we've already had a reasonable correction. My suspicion is that we're still only partway through this particular correction, but we'd be seeing this as an opportunity and sort of in further dips during this volatility phase to actually be adding to risk.
Well, thanks very much. Appreciate you joining in with all of that. Thanks indeed for that perspective. I mean, markets essentially are center stage. Rima, just one more point. The US relies quite heavily on China for their soybean exports. Yeah. And, this is also the constituency where soybean is grown. This is also the constituency which is a big supporter of Mr. Trump. So it seems like the tariffs on soybeans is directly aimed at Mr. Trump's supporters. I mean, Mr. Trump has made it in a way pretty not personal, but he's made it. He's pointedly picked out companies and industries from China which are hurting the US, and I think they're now only returning the favor. But this is, I guess, this will attract a fair bit of attention and maybe have a meaningful impact on not just soybeans but the agricultural sector as well. We don't have the full details yet.
Chinese households as well, because soybean is used in pork, and that is the key staple for most of the Chinese households. So yes, they're going to increase the prices of soybean. Remember, China buys nearly 1/3 of US crop in terms of soybean per se. And with the tariffs, it could get more expensive, which will only hurt the pork consumption.
And by the way, if you look at the earlier announcement of what US did to China, it doesn't. I mean, it was intellectual property related stuff, right? But there was nothing very high tech there, which was announced. I mean, if you look through the products, etc., and you read through the coverage as well, it seems that the interpretation which is being drawn is that the US has carefully chosen to. The aim has been to hurt China but minimize losses that the US consumer would take because of these tariffs. So this is, back and forth going. We'll continue to track this, but let's stay with the markets, which are down 110 points now. 10,138 is where we find ourselves. Ashwini is with us. Ashwini, thanks very much. Any way to react and trade this market?
See, first of all, China is not a Kadinanda country like us. So these guys will come at each other. Trump likes a good fight. You don't bend China's arm so easily. So this will get worse, and my sense is that you'll close at the lows of the day. And as far as that small little rally was concerned from 99.50 to 10,350 thereabouts, that certainly seems to be over. And these are issues, yes, Trump is talking to this guy and that guy, but I think this will have ramifications, and probably global markets will go in for another sell-off.
Okay, so cannot rule out an escalation. So in that context, Ashwini, what would be the trade that you take? We've already slipped some more, so now the Nifty is down in excess of 100 points.
Well, for the moment, Wockhardt is a sell with a stop of 770, target of 735. And BOB is a sell with a stop of 146, target of 134. I don't think anybody should be long on any stock now, because this sort of macro news creates a waterfall of selling, and any sort of domestic news or RBI etc., they can't make the market go up.
Any key levels on the Nifty and the Bank Nifty now from here?
Well, we're almost there. 10,100 was that key level. Once that gets taken out, you are back to 99.50. Similarly, on the Bank Nifty, where the decline has been 335, the rallies we had was 80 points, 190 points yesterday. Look at the decline. So it's very obvious which way is the current trend. And I think at some point we should get below 24,000.
Yeah. Ashwini, they do Kadininda, but they also act with other retaliatory action. I guess that is the takeaway. Yesterday overnight in the US session, you had a tweet from Trump on Amazon. Market sold off, by close they had picked up. Could something like that happen here as well? I mean, the correction doesn't last too long. There are statements from both sides that let's resolve this amicably, etc., and markets find back their footing.
You expect him to wake up and say sorry?
No, not sorry. Yeah.
Obviously, there'll be, if there are positive statements, you will get that bounce back. But whatever has been announced stays in place till one party backs off. And you tell me which domestic constituency will appreciate that you went out doing a 60 billion tariff and then you backed off. So it's very difficult to come back from these sort of positions. Yes, negotiations may also take long enough, but I think the US rally will get cleaned up by the time we get to the US Open.
Market weakness sustains as global equities fear a trade escalation between the world's two biggest economies, US and China. So as we speak, at the low point of the day for all the key indices. But moving on, we've got the management of Arvind Limited waiting by to speak with us. They've launched a new brand, ready to wear. Jay Suresh, the MD and CEO of Arvind Lifestyle and Arvind Retail, joins in now. Good afternoon, and thanks so much for joining in. Up until now, Arvind Brands was, largely these luxury brands like Tommy, CK, Sephora, etc. With this new brand that you've launched, ready to wear, are you, entering into or foraying into more affordable wear? And what are the projections that you have for this brand?
Yeah, good afternoon. I think, before I talk about the segment, I think Arvind as a brand, is a very, very strong B2B brand. And now we are also building a very strong B2C. Arvind has a very strong B2C brand. We already sell close to 500 to 600 crores of textiles, the fabric into multi-brand store. Arvind Ready to Wear is actually to enhance Arvind as a consumer brand. So the whole objective is to build Arvind as a consumer brand. As I told you that we already do 600 crores with Arvind in the B2C space. With Arvind Ready to Wear, we want to sort of move the Arvind brand in the consumer space to around 1,000 crores in 2 to 3 years' time. So that's the objective. And in terms of price point, it's going to be more in the mass premium segment, which means in the 1,800 to 2,000 a shirt kind of a price range.
Okay, so earlier you were largely supplying the material to other players, and now you want to launch your own brand. And 1,000 crores is the revenue target in 3 years, right? What would this do to your margins?
Yeah, that's right. I think this actually includes both the textile as well as, when I say 1,000 crores, it will include what we sell to the consumers in the direct, consumer space in textile as well as in ready-to-wear. And typically, the brand margins is better, so it should be accretive to the Arvind overall margin. But having said that, the size of this business is going to be relatively still smaller in the overall Arvind turnover.
Okay. Would this entail heavy investments? Because would you be having physical stores where you will be selling this? And take us through the investment requirements.
This is not a high investment opportunity. I think, we are now trying to leverage Arvind brand into the consumer space. So we will be largely driving the brand through franchisee stores. So there is no big investment in retail. Going forward, I think the investment is going to be largely in the building the brand Arvind in the consumer space. So all the investment is going to be marketing investment and not so much retail investment.
Okay, what about the manufacturing cost? What is the investment required to manufacture all these clothes?
See, manufacturing the textile, of course, comes from the current capacity of Arvind, so there is no additional capacity required for manufacturing the fabric. And we typically garment with our, we have a very good supplier base, so we'll do the garmenting through our suppliers who are already there in our ecosystem. So there is no investment from manufacturing point of view.
Okay, so you're talking about 1,000 crore from textiles per se in 3 years, which also includes your ready-to-wear brand. If you could just drill it down to this particular brand, the kind of revenues we should expect, the scale that you're starting with, to understand that as well as the margins?
Yeah, the scale we are actually starting with, probably this year we are looking at around 50 crores. And when I told you that in 3 years' time we want to take Arvind consumer brand to 1,000 crores, at that stage, we are looking at 20% of that contribution coming from Arvind ready-to-wear.
Okay, so 50 crore in FY19, and then by FY22, it should scale up to 200 crores.
That's right, yeah.
Okay. Welcome back. The Dow Futures is extending its slide as we speak, so now down in excess of about 400 points, closer to 450 points gone on that. So this is looking like a very weak day of trade for the global markets, and there is no place to hide. So metals are losing ground, whether it's Vedanta, Tata Steel, Hindalco, banks, State Bank of India, Axis Bank are nervous in trade, and even outperformers like a Bajaj Finance or HDFC Bank have gotten hit very hard. So fears of trade war escalating between US and China have spooked the markets, and bears have taken control completely. The advanced decline ratio, let's get that up for you on your screen, was holding up in favor of the advancing side an hour ago, and now those the scales have tilted in favor of the losing side. So we've got close to about 1,200 stocks on the declining side. Very interesting last 1.5 hours of trade coming up on the next show, Your Stocks. Thanks for watching Midcap Radar.